have bought more Bitcoin over the course of the last 2 months than at any time in my lifetime. That's how much I feel that this year is going to be a big year, because I do think that the conversation, which we had talked about before, there is a short squeeze coming in this name, guys. It will come. So the things you're seeing in silver will happen in Bitcoin, and I think it's going to happen this year or next year. And so I don't care whether it goes down to 75 first. What I care about is I don't want to be chasing it when it's 300, because I'm telling you, for people who didn't listen to me on Micron, they're all asking me when it's going to pull back far enough because they missed it. Once something goes up fast in these banana zones, you don't get a chance to get in.
Just like the price of Bitcoin and where this is all headed, do you think we're in a winter, a summer cycle? Are you with Kathy Wood, who thinks it's going to turn into $1 million a coin?
So whenever people ask that question, I always got to ask them, what's the time frame you're looking at? If you're looking at today, tomorrow, or a daily basis, there's no way I can predict. If you look at a 5-10-year horizon, it's very easy to predict. We're going to go up. If you look at a 1-year horizon, which is like what the most sort of common right. Framework is, 2026, I'm not sure. You may be. I think I have very strong feelings that you will probably be a super cycle.
Be a super cycle?
2026, yeah.
For Bitcoin?
For Bitcoin.
And what super cycle to you means what?
Well, normally Bitcoin follows 4-year cycles historically. If you look at historic data, like every 4 years, there's a all-time high and then there's a drop. But I think this year, given the U.S. being so pro-crypto and every other country is kind of following, I do think we will see this. We will probably break the 4-year right. cycle here.
Yeah, it's worrisome. The Fed basically has become now just a giant hedge fund. It's lost $1 trillion, and counting. It's going to be a gigantic loss. What it does is borrows money at 5.4% from banks and then dumps it into government bonds. So think what that trade does. That causes the government to think that it's better off than it is. And so that encouraged the government to be short when rates were zero. So why did the government borrow so much in T-bills? Well, because the Fed was buying the bonds and it made it look like yields were going to stay low for long. Remember the low for long phrase. So we've got these multiple problems that are going on, and it endangers the dollar. So that's the basic case.
Instead of the Fed having such large balances, wouldn't the private sector be starting businesses and risking capital and bringing returns and adding to growth? Wouldn't all that money be better if it wasn't with the Fed?
That's right, and we're depending on private equity. So as the banks get squeezed out, because they're lending so much to the Fed, it's literally a floating rate loan from banks to the Federal Reserve so it can buy government bonds. So if that were freed up, that would allow the banks to at least consider a small business loan, an inventory loan, the kinds of things that help the economy grow. And this is on a global basis. It's not just the Fed. It's all the major central banks doing the same thing, meaning taking money from the economy in order to buy government bonds. We need to be clear on that. I heard the previous segment, they talk about money printing. There isn't any money printing on it. It's just money borrowing, and they pay top dollar for it. The Fed pays 5.4 to banks and 5.3 to money market funds, so to the Fidelity and Vanguard and so on.
You think the only solution is to print money and to fill in that gap. And so we'll see how long that lasts. And if nobody buys your debt, so when they say print money, that basically means the central banks are monetizing the debt of their government, right? So the government saying, we got to spend a crazy amount of money that we don't have to pay for this war that we're getting in, and is only going to increase and get more expensive and get worse. And if nobody's going to buy our crazy government debt, then we have to monetize it ourselves. And what that means, if your central bank is buying your government's debt, the outlet valve is the currency, so the currency gets debased. So they're stealing the purchasing power of everybody who uses their currency in order for the government to spend money that it doesn't have. That's how the whole system works, and that's happening in every Western nation right now, and that's going to, I believe, accelerate dramatically in the coming years.
So do you still believe that you're a buyer of Bitcoin, or are you already like you can say, shadow central bank of Bitcoin?
Well, our view is that Bitcoin is digital capital. It is the world reserve capital network. It's replaced gold as the global non-sovereign store of value for the human race. And so banks normally buy credit. We actually sell credit. So what we're doing is, it's the reverse of commercial banking and retail banking. It is sort of like central banking. We are sort of like the central bank of Bitcoin, in the sense that we created a product, STRC. It's a currency that's pegged to the dollar, and then we back that with Bitcoin. And as people buy that currency, STRC, we buy Bitcoin with it, and therefore we're funding the Bitcoin economy by linking it to the traditional finance economy and to the money markets of the world.
Actually, when you said about your raising capital, including preferred perpetuals, to fund buybacks, to be exact. So how do you respond?
To fund Bitcoin buys.
Okay.
Bitcoin buys.
But still,
right?
how do you respond?
We're not buying back stock, we're buying Bitcoin. We're actually funding the Bitcoin network.
Look, 2026 is going to be a big year for Bitcoin. It's going to be a big year for MSTR. And as a result, the best thing you can do as you go into a big year is to start to build a strong capital base. And that's what we've done really over the course of the last few years, but we accelerated the last 2 weeks. The other big thing about 2026 is it's going to be the coming out party for Stretch, which is our preferred equity. We launched it in the middle of last year. It's grown up to be over $3 billion this year. And we think building a strong capital base with Bitcoin, a strong US dollar base, all those things are going to bode well for what's going to happen with Stretch over the course of 2026.